JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 8th of July 2020, so yep, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff, a few of the charts that we looked at yesterday basically. But as always, before we do that, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So let me just load it up. There we go. So yep, that's the page which I believe you can find useful. Now then, jumping into this figure very quickly here. So as you can see, the the number unfortunately continues to rise. We did have another surge in numbers and daily cases, number of infected people. So, and yesterday we had a spike kind of above the 200,000 globally. So basically, not very good news. So some information, kind of sources provide this figure, and some sources kind of already tell that we are just around 50 or 45,000 away from hitting the 12 million, and it's not even the end of the week. So if last week, for example, it took around a week to get to gain around around a million people infected globally, now it's kind of really moving much quicker. So unfortunately, of course, but it is how it is right now. So I hope you're all guys staying safe. Now, let's see how this is impacting the market. Now, the first one I want to touch on here is the Shanghai Composite. This index is still open and it's currently trading in the positive territory. I talked about this this index yesterday, and basically from the beginning of this week, I keep talking about this one. And as you can see, although it did kind of open a little bit lower, still it's pushing nicely to the upside. It's trying to make its way back to yesterday's highs. However, let's see if it actually can happen, because what I was talking about yesterday was that if this is the level, if this is the high of this week, which is around the 3,407 territory, we may see maybe a bit of a correction here to the downside. However, as also mentioned before, that in order to aim for that correction, we would at least need to see a drop below the 3,336 level, which initially we had a break below it, but as you can see, the bulls quickly reversed everything and kind of are pushing the index still to the upside. Now, it is relatively, well, I would say a modest gain comparing it to the previous days today, so around 1%, 1.10, but still a gain. So of course, for now, we'll keep a close eye on this one, and we'll keep an eye on this barrier, the 3,407 territory, because if that gets broken, of course, this would confirm a forthcoming higher high, and higher levels could be met. Now, but again, if it fails to move here, a reversal here to the downside and a drop below the 3,336 territory could do the trick for more sellers, and we could see this one correcting lower towards the 3,288 territory, or this a 23.6% retracement on the Fibonacci, but this will, like I said, this will work if we don't reach this level right here, the 3,407 zone. So keep your eyes on that one. Now jumping into another index, and this one's Nikkei. Nikkei is today on the in the negative zone and closed already, so it closed in the red, and but still remains above this downside line taken from the high of the 9th of June. I talked about this one, and this week of course we saw a nice push above it, where the index kind of found resistance near the 22,734 territory, and then kind of we started we started pushing lower. However, don't get me wrong, we still have 2 days left of trading, and the fact that the index still balances not only above this downside line but also above the 21-day EMA, and which some buyers might see as a good positive sign. We don't have much data coming out today, guys, so I mean, be very like I said, not much is happening today in the calendar. In terms of the economic calendar, we have some oil stats coming out from the US, so but I'll get to oil a little bit later. But for now, looking at Nikkei, here, like I said, the situation is a little bit difficult, I would say. So like I said, yes, on one hand, everything still could be seen as a positive because we are still above this downside line and above the 21-day EMA. However, just to be on the safe side, probably let's wait for a push above the this week's current high near the 22,734 mark, and then yes, we could maybe consider some higher levels again, and maybe we'll first, of course, we'll drag it to the highest point of June near the 23,185 zone, and then we'll take it from there if this gets broken, because such a move would confirm forthcoming higher high, and higher levels could be met. But again, let's first see that move. Now jumping into DAX, yesterday the index closed in the red, slightly in the red, but what I was talking about yesterday, that the fact that we will be getting, well, in the morning, my morning video, what I was saying, that the fact that we'll be getting a nice opening gap to the downside, this kind of formation here is kind of indicating an island reversal. However, even if we do see a drift lower here, don't get me wrong, we are still, the positive outlook remains on the table, because we would still be trading above this upside support line taken from the low the 19th of March, and in a way we could see this one drifting lower, testing this upside line, and if it fails to move below it, a nice rebound could happen. So that's why I keep this idea in your heads, guys. It could play out, but again, if by any chance this index starts pushing back up here, still the more comfortable level after a break of which we could consider the upside would be above the June high near the 12,913 zone. So yep, keep your eyes on that one. Gold, finally we have reached the high of 2012. I talked about this a lot in the past couple of weeks, and yep, yesterday we had a nice strong move higher, where the commodity kind of reached this 1795 or in the 1796 levels. So basically mission accomplished in a way. Slightly above that we do have, of course, that psychological 1800 level, which was not tested, but the fact that we managed, this arrow here worked out nicely, this idea here worked out nicely. We saw a nice reversal initially, test of this upside line, and then a push higher, so we can remove this arrow. And now what we're going to do here, of course, we will continue targeting the upside, especially if the price remains above this short-term upside support line. So the next target for us is the psychological 1800 level. But then, of course, and if I jump into a monthly chart, then of course we could start looking at some levels like, for example, the 1827 zone, or even further above that. We do have the gold's all-time high, and which let me just quickly put this one on the chart, and the gold's all-time high is around here, guys. Oh, let me just capture this one. There we go. So near 19 to 21 mark, approximately around there, guys. So a good potential target to watch out. And if we look at this monthly chart, you can see why. I mean, you can see that this is right now pushing higher, and in a way, if we apply technical analysis here, I mean, for now, of course, we will aim for this kind of overall, we'll aim for this 1921 zone, but if that gets overshot, of course, this would confirm a forthcoming higher high, and the next target would be that psychological 2000 territory, which could be tested nicely. But again, of course, this is a little bit of a long-term shot, but from the more of a short-term perspective, all eyes right now are in this 1796 territory, roughly around here. If it continues to provide resistance, maybe we could get a bit of a correction here to the downside. However, we would prefer to wait for a drop and ideally a daily close below the upside line, because as you can see, we kept on getting these false breakouts here, but the commodity kind of still ended up pushing back above the upside line. So that's why preferably we would of course, we would like to see a drop below the 1748 zone, but if we do get a daily close below this upside line, then we could consider maybe some lower levels in this little area right here. Now, jumping into WTI oil now, as I said, keep your eyes on the calendar today. We do have the crude oil inventories coming out from the US, so yep, it will be quite interesting to see. And we also have the EIA weekly refinery utilization rates from the US as well. So at the moment, you can see that the commodity here, WTI oil, is just flat. It's not doing anything. As I mentioned before yesterday, that we're waiting for that pop above the 41.61 level before considering starting to consider higher levels, or we would need to see a drop below the 37.10 territory in order to aim for lower levels. So that's why for now, be very careful here, and like I said, keep your eyes on the data later on today. Now, jumping into Ripple. Now, Ripple is the best performer so far. Ripple is pushing higher, and yesterday, as I've mentioned to you, yesterday I was covering Ripple, and I was saying that even if we see a bit of a decline here, as long as this 21-day EMA continues to provide support, there is still a chance for this one to reverse and push higher. As you can see, Ripple did find support here and is now pushing higher. So wonderful. We got a break of this downside line as well, taken from the high of the 30th of April. And of course, the picture now is kind of a little bit more on the positive side. However, we're not going to drag this one way too much to the upside yet. If the price today, for example, if this daily candle stays above the 100-day EMA here shown as the green line, then yes, of course, higher levels could be met. We could then aim for this 200-day EMA, or as I said, this 0.2152 level marked by the highest point of June. In terms of the downside, well, we would need to see this one dropping back below the 0.1743 territory in order to consider lower areas. Jumping into a few pairs now very quickly. AUD USD, I talked about this one yesterday, and basically I was telling you guys to keep a close eye on the 0.6975 territory, which, as you can see, continues to provide decent resistance. And today we are seeing a bit of a decline here, and what I was also mentioning, that even if we see a bit of a decline here, as long as the rate continues to balance above this short-term tentative upside support line taken from the low of the 15th of June and above this 21-day EMA, then yes, it's still this move lower could be seen as a temporary correction before another leg of buying. So something like this maybe could be possible. So I'll keep this arrow for now, just for our future reference. We'll see if this is going to work out, but for now this is the kind of game plan. In case the pair does not travel lower here and towards this upside line, we will keep an eye on the 0.6975 level, because that's still the more comfortable level, after a break of which we could consider higher areas. So in a way, how you could play this one out here, guys, if you want to go for the downside, probably wait for a break of this upside line and then a drop below the 0.6842 territory, because here, like I said, if you're trying to go for the downside here somewhere up until this upside line, it could be still tricky, because the pair could travel a little bit lower, fail to test the upside line, and then reverse earlier. So that's why our upside scenario is mainly from here, from the 0.6975 territory. Nice good break above, which could open the door towards slightly higher levels. In terms of the downside, as I said, drop below the 0.6848 territory could do the trick here, and we could then aim initially towards this 200-day EMA. Now, jumping into US dollar against the Turkish lira. Now, this is something that you probably don't look at very often. Maybe some of you do look at this, but basically, I do like to look at these exotic pairs, because they sometimes present themselves with interesting opportunities. And as you can see, for now, if we just look at this kind of clear chart, you can see that the rate kind of was moving higher here, and after it reached its all-time high near the sorry, was this the all-time high? Yes, that was the all-time high. It overshot the previous all-time high, so it reached the all-time high near the 7.2685 territory and kind of drifted back down. Then the pair found support somewhere around here near the 6.6736 territory, and then reversed and pushed back to the upside. Now, here, right, what you can see here right now is that the rate continues to float above this 21-day EMA, and this 21-day EMA continues to provide decent support. So for now, in a way, all this kind of is still looking quite positive. The fact that it's kind of moving sideways for now, it increases the chances of seeing either a pop here to the upside or a sharp decline. So that's why for now we will keep an eye on this one. We'll keep watching some of the levels, and in a way you can see that you can say that the pair is trading within the range, but like I said, it's a little bit on an incline, so that's why we're not gonna draw. I'm not gonna draw any ranges here for now. What you could do here is maybe keep an eye on this little spike here that we had on the 22nd of June. That's also, by the way, the highest point of June. A nice good pop up of the 6.9131 level could open the door towards higher levels, just to be, like I said, this is the level just to be on the safe side. In terms of the downside, now of course, it's a little bit of more difficult task here. I mean, one of the levels to watch out could be this one right here, 6.8120. A drop below this, of course, first the pair would drop below the 21-day EMA, and then maybe, like I said, a drop below this could increase the chances of a further decline. But again, for now, basically the most exciting part here is the fact that the pair is kind of moving sideways. It's basically flat. It has been flat for a couple of weeks now, and yep, we're keeping an eye on this one, and we're waiting for that nice good pop here, and yep, which could prove itself to be quite interesting. But at the same time, guys, be very careful and have your stop losses in place. USDCHF. Now, I talked about this one on Monday, and on Monday we had a violation of this lower side of the range. As you can see, the pair drifted lower. However, it quickly got pushed back towards the towards this range and kind of ended the day somewhere here near on kind of bang on this lower bound of the range. Yesterday we had a bit of a push higher, but still the rate again ended the day near this range, near the lower side of the range. And today we're seeing a bit of some positivity. However, to be honest, we'll still remain neutral on this one, maybe even a little bit leaning towards the downside. However, again, the fact that it drifted lower, it failed to reach this 0.9422 territory here, sorry, 0.9376 territory marked by the lowest point of June. So this level here becomes quite an interesting one to watch. So if you're more on the cautious side, you could wait for a drop below that area and then kind of target the downside, because what we don't want to see here is, let's say for example, this pair drifting a little bit lower, failing to even reach this week's low and then reversing back to the upside. So maybe the 0.9376 level could be a bit of a safer game here if you're looking for some downside here. In terms of the upside, well, it's a little bit of a difficult one. So if the pair starts pushing back into the range here, and a push above the current highest point of this week near the 0.9468 territory could do the trick for more buyers, and maybe we could see this one climbing a little bit further north. But again, overall, let's not forget that the pair is still trading below this downside line taken from the high of the 23rd of March. GBP USD. So the pair here is a little bit difficult. I talked about this one in the beginning of this week and in the end of last week as well. So basically, we got our break above the 1.2543 territory, the one that I was talking about. However, the rate kind of ended the day near this area, and as you can see, yesterday it pushed higher but found resistance near the 200-day EMA. So for now, probably we'll take a bit of an maybe neutral stand on this one, or actually it's a little bit of a difficult one. I would say maybe a little bit of a cautiously bullish, maybe even, because still it is closer to the 200-day EMA here, but you see the problem here is the weakness of the pound. The pound is not really the strongest the strongest currency right now, and however, in this specific situation here, the GBP USD might gain due to some weakness in the dollar right now. So unless the dollar starts strengthening sharply, then yes, this pair could start drifting lower. But again, because we're closer to the 200-day EMA right now, there is a chance for this one to push further north. As you can see, the EMAs, the 21-day EMA and the 100-day EMA are kind of starting to kind of shift to the upside. The RSI is above 50, which is a positive sign, and the MACD has also started kind of just poked its nose above the trigger line. So that's why keep your eyes on this one, guys. It could, like I said, push a little bit higher. However, we'll wait for that confirmation break, ideally a daily close above the 200-day EMA, in order to kind of consider some further acceleration to the upside. Now, jumping into Euro GBP, now this was where it's quite interesting, because so the Euro GBP has managed to break its upside support line. This one, the medium-term upside support line taken from the low of the 18th of February, and the pair, now you can see that yesterday, for example, it closed even the daily candle. So this way, kind of increasing its chances of a further drift lower. Of course, we could consider further declines, but as I've mentioned before, the more comfortable level after a break of which we could aim for the downside would be from somewhere here, the 0.8864. However, I do understand you probably don't want to miss out on any moves here, so that's why keep your eyes on yesterday's low. A drop below that, yep, could kind of increase the chances of a further decline. And Euro USD. So here the situation is also a little bit difficult, and this is what I was talking about previously, that even if we get a push above this downside line, still we need to see a nice good pop above the 1.1353 level, which, as you can see, for now is kind of playing as a nice area of resistance. So on Monday we had this spike higher, we broke higher, but failed to kind of reach the 1.1353 level. Yesterday the rate declined, but remained above this downside line. So in a way, the bulls are still holding up here and trying to kind of keep the pair afloat. However, more of the bulls probably could join in here somewhere near this, like I said, on a break of the 1.1353 level, and then this is where we will start considering some higher levels. But in terms of the downside, we need to see a drop below the 1.1168 territory in order to aim for lower levels. So guys, I really hope you found it useful, so I'll have to wrap it up here. Thank you very much for watching and listening. If you want to catch my video later on, my trader's tea time is always 13:15 GMT. But for now, I hope you have a wonderful trading day, guys. Stay safe, both health-wise and market-wise. And yep, like I said, we'll catch up in my trader's tea time, 13:15 GMT. Thank you very much, and bye-bye.